For years, you've trusted LG with your laundry, your groceries, and your weekend movie nights. You've been their customer, but now, they're giving you a chance to be their partner. The question is, should you accept the offer? Hello and welcome to EPK Capital's channel. The Indian primary market is buzzing with excitement, and the latest talk of the town is the much-awaited IPO of LG Electronics India. A household name for decades, LG is finally opening its doors for public investment. But the big question is, should you, the retail investor, put your hard-earned money into it? In this video, we're going to do a comprehensive analysis of the LG India IPO. We will cover all the crucial dates, the launch date, closing date, and the all-important listing date. A look back at the company's journey in India, its history, and key milestones. We'll decode the buzz around its grey market premium and see how it has evolved. A deep dive into the company's financials and the key details from its DRHP filed with SEBI. We'll weigh the positives and negatives of investing in this IPO. And finally, our verdict: is the LG India IPO a subscribe or an avoid at the current price? So, grab your notepads, and let's get right into it. Key IPO details, mark your calendars. First things first, let's get the dates and numbers right. The LG India IPO is open for subscription from October 7th to October 9th, 2025. The company has set a price band of 1,080 rupees to 1,140 rupees per equity share. The total issue size is a substantial 11,607 crore rupees, which is entirely an offer for sale, OFS, by its South Korean parent company, LG Electronics Inc. This means the company itself won't receive any proceeds from the IPO. The allotment of shares is expected to be finalized on October 10, 2025, and the shares are tentatively scheduled to be listed on both the BSE and NSE on October 14, 2025. For retail investors, the minimum lot size is 13 shares, which translates to a minimum investment of 14,820 rupees at the upper price band. A look back: LG's journey in India. IG's association with India is a long and successful one. Established in January 1997, LG Electronics India has become one of the most formidable brands in the country's consumer electronics and home appliances market. Over the years, LG has been at the forefront of innovation, introducing many firsts in the Indian market. They were the first to introduce direct drive technology for washing machines in 1998 and launched the first microwave ovens in India in 1999. More recently, they brought India its first 4K OLED television in 2015 and the world's first 8K OLED television in 2020. This consistent focus on bringing new technology and tailoring products to local needs has helped them build a strong brand reputation and a loyal customer base. The grey market buzz. Gauging investor sentiment. Now, let's talk about the grey market premium or GMP. The GMP is an unofficial indicator of how an IPO might perform on its listing day. As of October 7, 2025, the grey market premium for the LG India IPO is around 318 rupees to 323 rupees. At the upper price band of 1,140 rupees, this suggests a potential listing price of around 1,458 rupees to 1,463 rupees, which is a healthy premium of about 28%. Information on the grey market premium from 3-6 months ago is not readily available, as active trading in the grey market typically picks up closer to the IPO launch. However, reports from early October 2025 indicated a GMP of around 251 rupees, which has since risen, indicating growing investor interest and positive sentiment. Decoding the DRHP, a look under the hood. The Draft Red Herring Prospectus, or DRHP, is a crucial document that gives us a detailed look into the company's health. Here are the key takeaways from LG India's DRHP. Issue objective. As mentioned earlier, this is a complete offer for sale. The parent company, LG Electronics Inc., is offloading about 15% of its stake, reducing its holding from 100% to 85%. This means the money raised will go to the promoter and not be used for the company's expansion or debt reduction. Financial performance. LG India's financials paint a strong picture. For the financial year 2025, the company reported a revenue of 24,367 crore rupees and a net profit of 2,203 crore rupees. This represents a significant year-on-year growth. The company's EBITDA margin for FY25 stood at a healthy 12.8%. Market leadership. The DRHP highlights LG's dominant position in the Indian market. They are a market leader in several categories, including washing machines, 33.5% market share refrigerators, 29.9% market share air conditioners, 20.6% market share microwaves, 51.4% market share. Shareholding pattern. The IPO will lead to a 15% dilution of the promoter's stake. A significant portion of the issue is reserved for qualified institutional buyers, QIBs, with 35% allocated to retail investors. The good and the not so good. Positives versus negatives. Every investment has its pros and cons. Let's break down the key positives and negatives for the LG India IPO. Positives. Strong brand and market leadership. LG is a well-established and trusted brand with a dominant market share in key product categories. Robust financial track record. The company has demonstrated consistent revenue growth and healthy profit margins. Extensive distribution network. LG has a vast and well-penetrated distribution network across India. Focus on innovation and premiumization. The company has a history of bringing innovative and high-value products to the market. Attractive valuation. Compared to its listed peers, the IPO appears to be attractively priced with a P/E multiple of around 35.1x its FY25 earnings. Negatives. Entirely an offer for sale. The company will not receive any funds from the IPO for its own growth or operations. Dependence on parent company. LG India is reliant on its South Korean parent for technology and brand usage, for which it pays a royalty. Intense competition. The consumer durables market in India is highly competitive with the presence of both domestic and international players. Vulnerability to economic cycles. Demand for consumer durables is often linked to the overall economic health and consumer sentiment. Final verdict: to invest or not to invest? So, we come to the most important question: should you, as a retail investor, subscribe to the LG India IPO? Considering the company's strong brand recall, consistent financial performance, market leadership, and the attractive valuation compared to its peers, the LG India IPO presents a compelling investment opportunity. The healthy grey market premium also suggests the possibility of good listing gains. However, the fact that it is an offer for sale is a point of consideration. While it doesn't directly benefit the Indian entity's coffers, it does increase the public float and brings in more transparency and accountability. Based on our analysis, we would recommend subscribing to the LG India IPO, both for potential listing gains and for a long-term investment. The company's strong fundamentals and the growth potential of the Indian consumer durables market make it a promising bet. But remember, investing in the stock market always comes with its own set of risks. It's crucial to do your own research and make an informed decision based on your financial goals and risk appetite. That's all for our deep dive into the LG India IPO. We hope this analysis helps you in your investment journey. If you found this video helpful, don't forget to hit the like button, share it with your friends, and subscribe to our channel for more such insightful content. Let us know your thoughts on the LG India IPO in the comments below. Happy investing!